Okay. So thank you to everyone joining us, and those of you listening into the recording after the fact. Today we have the Infineo team on, and we're going to be talking about our student loan minimizer that we just held. In this webinar, we launched for the first time our student loan minimizer product, which is a cash management with whole life insurance tool designed to help you pay down, obviously, your student loans first and foremost, but then your external debts, and do all this while building up an asset in your whole life insurance policy. And I am not the life insurance expert here, but we are incredibly lucky, and we've got 5 of them here today to help walk us through this. We have Dr. Murphy, who is going to be our co-host here. And then we've got our speakers, George Roth, Wayne Durksen, Liz Lamond, and James Pollard, all with Infineo and all serving different roles. Maybe for the people that are going to be listening into the recording, you guys could do just a short intro. I know that we do them every time, but we get different people. So, George, if you want to start, that would be great.
Great. Thanks, Jackson. Yeah, so George Roth, I'm the director of Infineo Canada, so our agency here in Canada, responsible for 18 life licensed agents across the country, from BC to Ontario, and we're moving into Quebec as well. Happy to be here, and
that is perfect. Thank you, George, and we're really happy to have you. Wayne, Liz, James, would any of you like to go next?
Yeah, I'll quick go. And my name is Wayne Durksen. I've been with Infineo since our original founding, and really excited about what's transpiring in our world. Been in this industry for some 35, 40 years, and am absolutely captivated by the concept of using properly structured, participating, dividend-paying whole life insurance to build wealth and secure a future that I can actually pass along to my loved ones and next generation. So delighted to be here.
Thanks, Wayne. And with that, Liz, if you want to go next, seems like, Liz just left us. Let's go with James if you can.
Sure. James Pollard. So I'm the director of product development at Infineo here. I've also been in the industry, almost 30 years, been an internet banking practitioner for many years. And I just, what I'd like to do is build out practical solutions that allow people to implement the infinite banking concept, cash management with whole life, into their lives in a way that they can understand. Because like anything else, you're going to learn how to do it by doing it. So creating a product that solves a particular problem and give people detailed instructions on how to do that, gives people the best chance of success in creating this new financial lifestyle that we all know is so powerful.
Beautiful. Thank you, James. And Liz, I know you're having issues with sound, but if you can hear now and are here, I'd love to have you introduce yourself.
Yeah, thanks. I think it's working. Can you hear me okay, Jackson?
Crystal clear.
Okay, perfect.
Thanks, Liz.
I've also been working in this industry for quite some time. Really enjoy working with people to implement different solutions as it applies specifically to their situation. So teaching people about the power of whole life insurance and how it can apply. So, for example, we have calls with people, and I'm sure we're going to talk about this more, but, they come in with, understanding one problem that we need to solve, and we can often solve multiple problems in the solution that we're implementing. So it's really great working with people, and looking forward to jumping into this conversation specifically about the student loan minimizer.
Beautiful. Thank you so much, Liz. And last but certainly not least, my co-host that I'm going to pass this conversation over to for not the majority of, but he really does a great job at asking the questions. Dr. Robert Murphy, if you would like to introduce yourself for any listeners that may not know you, and then we'll dive right into this conversation.
Sure. Thanks, Jackson. Thanks to all of our panelists for you taking the time out to do this. So yeah, I'm Robert Murphy. I'm the chief economist at Infineo. I am a member of what's called the Austrian School of Economics. And just to set the table a little bit here on what we're doing, or the context, just some facts on the basic the amount of student loan debt that there is in the United States, and particularly the government's hand in it. And so right now, total U.S. student loan debt is about $1.7 trillion. And of that, the federal government actually owns 93%. And just to give some more context on that, people might just say, oh, wow, okay, I guess that's something the government was in and I didn't really know. That's a fairly new phenomenon that the federal government's footprint in that sector. It really took off. It was in the incoming Obama administration. So, Barack Obama got elected first in the fall of 2008 after the financial crisis swept the world. And then he came in and there was it had different names like the stimulus package or reinvestment or investment recovery act. And is one of the provisions in that allowed for the federal government to greatly expand its ownership of student loan debt. So I'm just looking at a chart here. During our formal presentation, we do the webinar version of this about what you're about to hear. I went from, I'm just looking at eyeballing this thing, from what it was it was a little under, it was like 180 billion that the federal government directly owned, and then it just started marching up steadily until now. It's, like I say, it's about 1.5 trillion, something like that. Just two more statistics for you. So right now, in terms of the United States, there's about 43.2 million borrowers, who currently still hold student loan debt. And for the federal portion of that, which again accounts for 93%, the average balance right now is about $37,000. Okay, so this is obviously a very big problem. And the reason that I personally stress, the government's role in this is it's just another element of just for people who in general, want financial independence and so on, besides just having a debt, that's one thing. But then if you have a debt that the federal government controls, and then moreover, that they have such a huge portion of it, so that it's just another way that the government is effectively, having its way in terms of the scope of education. So that now it's not merely that the government is funding education from the top down directly, but in the sense that now, that if you need to get a student loan in the United States, you're basically borrowing from the federal government when all is said and done, even if a private person issues or entity issues the loan. If the government's ultimately probably going to be the one that gets it and takes it on its books, then of course the government's going to have all sorts of rules about what qualifies and what not, what kind of institution qualifies. So again, just more ways that the government is using its role, relying on the central bank in order to have influence beyond just what the narrow statutory things might lead you to believe. So that's just part of the context of why, for me specifically, I am very interested in giving people the tools to quickly extricate themselves from, this student loan that's hanging over their heads, put it that way. So, Jackson, if you want to take it back over and kick us off.
Yeah, of course. So getting all that great insight from Dr. Murphy on the problem that we have at hand here, it's a very real problem that I know a lot of us have faced ourselves. I would like to kind of just dive into the origin of the student loan minimizer itself and kind of where it came from, how it was developed, and what was the inspiration. And I really think it would be great to have James, you speak on that first, being the head of product development. And so if you could just speak to the origin of the mortgage or of the student loan minimizer and what inspired it, that'd be great.
Sure, Jackson, thanks. The inspiration is really quite simple. You simply look at what the problems people are facing today, right? I mean, we launched the mortgage minimizer first. That's a huge problem for people, getting out from under that debt. But, just as common, and especially in the U.S., even probably more in the American lexicon, is the discussion around student debt loan problems. And it's not just a young person problem. When we did the research, I was shocked as a Canadian looking at it. But, in the decade leading up to COVID, the number of people on Social Security having their benefits garnished because they still own federal student loan debt went up 500% in the decade before COVID. I was unfamiliar at the time of these Parent Plus loans, which actually, Jackson, you pointed out to me, and I looked into that and the amount of those that are in default and the draconian measures that government will take to collect that money, just like student loan debt. You cannot escape that even with bankruptcy. That'll follow you the rest of your life. So it's just a big problem. So solving a problem that's at the forefront of people's minds just makes the most sense.
That makes a lot of sense there, James. And I see, Brent, that you're requesting to speak, but we're actually not going to be taking up any other speakers. I will pin a tweet right now where we can take some questions, or you can also send me a DM and we'd be happy to talk about whatever question you have there. I don't know if anyone from the team has any other thoughts about the origin of the student loan minimizer tool and potentially how it can help solve problems for, I know James just really spoke to in the US, but I do know that this is also a problem in Canada. It's a different problem. And so maybe we could have one of our Canadian experts shed some light on the issue in Canada.
Yeah, absolutely. And I think, as James alluded to, this is not an issue just affecting people in their early 20s. This is an ongoing issue, and student loan, whether you're in the US or in Canada, stays with people well into adulthood, where they're starting to do other things like raise a family, try and get a house, all of those pieces. And the problem keeps accumulating, not getting better. So it's really, important that it gets addressed, because it starts to impact many other areas of life, and then, continues well into adulthood while people are trying to navigate other financial pieces. So if people can, set something up for their kids, that's fantastic. But even as adults, addressing this and addressing any other better ways to manage other assets and other debts that they have as well is all part of the solution that we discuss with people.
Beautiful. Thank you for that insight there, Liz. And with that, potentially, Dr. Murphy, you may actually be able to speak to this. But I mean, especially in the U.S. recently, there's been a lot of talk over you did speak to it in terms of giving a statistic, but I'd love to hear you speak a little more deeply on the impact of the overwhelming federal control of the student loan market, and just from an economic perspective, what that could potentially lead to. I don't know if you have any insights there. And
yeah, sure. I can say a bit about that. So yeah, part of the issue is, for one thing, it just politicizes everything. All right, so I'll keep these remarks brief here, but it's, again, whether one cares about the particular justification or not, just in general, the fact that in the United States now the student loan debt has become such a political football, and there's all sorts of there's famous things about like Elizabeth Warren was up giving us talk somewhere and how she was in favor of it, and then somebody came up and said that someone caught it on their cell phone or whatever, the footage of this, and somebody was like, hey, I worked a second job and did this, and we really worked hard to pay off all of my daughter, I'm making up the specifics here, but the $40,000 my daughter's student loans and everything, and so now that you're talking about this plan to give amnesty and so forth, are we going to get a check for that? The fact that we just busted our butt for the last 5 years to pay that off? And of course, and I forget exactly what her answer was, but it was very dismissive, and it was no was the answer. So I'm just saying, when things get politicized like this, and it is compounded on all of this. I mean, these problems all spill over into each other. There's plenty of Americans right now that they rack up huge debt, and it's partly fueled by the fact that the rates are so low, and if the taxpayer is ultimately on the hook, that these loans can be given, even if in many cases it's not like it's just people going to medical school and they're going to become brain surgeons and then be able to pay the loan off. It's people getting degrees in areas that are not particularly marketable, and they come out of school in some cases with more than $100,000 in debt, and they can't get a good job. And so that's just going to be hanging up. You can't even bankrupt out of it. And so in that environment, then there's lots of calls, of course, for the government to, quote, do something about it, because, it really is kind of a bad situation these people find themselves in. They make a lot of poor choices. No one put a gun to their head, but still, it's things that it's like a double-edged sword. That on the one hand, the government, the reason for its justification of doing this is to say, we're allowing people access to higher education that the private credit markets wouldn't have funded. Okay, but the flip side of that is the reason if the private credit markets purely on their own without government involvement and backing up the loans or literally taking them off your books, if they wouldn't give somebody a loan to fund these outrageously high tuitions that aren't really giving you job skills that will allow you to justify that financially, Well, then that is kind of the flip side. So don't be surprised now when there's millions of Americans with these degrees that can't service their loans. So that's kind of why the lenders in the front end don't want to do it, left to their own devices, because it's not a good investment. It doesn't make sense financially. So it just causes, these huge mushrooming problems. And then everyone's fighting, various taxpayers. So, hey, my kids didn't go to college. They didn't go to an Ivy League school or whatever. And so why am I being forced to? So it's ultimately like working class taxpayers are funding, the children of more upper income people who went to college and racked up huge student loan debt. That's kind of how some of this is breaking down. So it's being cast as helping the little guy, but no, it's more like the actual working poor are helping people who are a little bit better off than they are financially, but not super rich. So that's one example of how this just fuels resentment. And again, the federal government now, that just gives them more avenues to influence education top to bottom, because they're controlling both the supply side and the demand side. And they, and one other thing, with this presence, it helps fuel tuition costs, right? If it weren't for the demand side support, then college wouldn't be as expensive as it is right now. So I think lots of people, and I used to be a college professor, and I think easily a third of those students shouldn't be there, right? Like, not everyone should get a PhD. That would be crazy. And I think way too many people right now think they have to get a 4-year undergrad degree. And so this, again, is all part of the problem. So we're not going to fix that stuff by next Thursday. But one thing we can do is say right now, if you have a bunch of student loan debt, you can kind of stop being part of this problem by taking control of it and getting out of that as fast as possible. And that's, of course, what we're here to do.
Thank you for adding that color. That was really, really helpful. And I think for our listeners, that was really, really great context on the problem and how the federal government really controlling the student loan market can really lead to a ton of despair, like we're seeing now for a lot of people. And so I guess with that, James, before kind of diving in more specifically to the student loan minimizer product and process itself, Dr. Murphy did just touch on an aspect about that we haven't touched on yet, which is private student loan borrowers. And so I am just interested in addressing real quickly if our student loan minimizer process can be used for federal or private student loan borrowers, or if this is specifically for one or the other. It'd be great to have you answer that.
Yeah, I will answer that, Jackson. But before I even do that, I just want to add one piece to what Dr. Murphy was saying, that people need to realize that even if there's amnesty or student loan forgiveness provided by the federal government, that debt is not going away. It's simply being paid somewhere else. And people got to realize that anytime the government puts $1 in your front pocket, the only way they're able to do that is because they took it out of your back pocket first, right? So, I mean, it's just a big shell game. But further to your question specifically, yeah, it doesn't matter who's backing the student debt, federal, private, state. Private, I mean, you borrowed from grandma, grandpa. It doesn't matter where the debt is. It operates the same within our system. And, the reason for that, and we had a question this morning about what happens if my student loan debt has 0% interest. Should I still do this? And the answer is absolutely, because it's not so much the interest you're paying, but all the future interest growth that you'd be losing by paying off that debt simply with your own earned dollars. By using a policy the way we show you how to do, then you get to capture the future growth on those dollars and you're not lost. $1 is just $1. You don't have to give up all the future growth on it.
And so on that note, James, I would love to dive a little deeper into the product itself and the process of it. The student loan minimizer is a solution, which is a product and a process. And so I would love to hear you dive a little more into the details of what the student loan minimizer is, because for our listeners, this might actually be their first time hearing about our student loan minimizer. And so if you could start from the top on what it is, that'd be great. And I'd love to get all of our other panelists' opinion on how they're utilizing it.
Sure. How many days do we have?
We're only scheduled to go another 40 minutes, but with you, James, I think I could do that.
Yeah. So, no, ultimately, like any solution, I mean, at the end of the day, we're talking about finding a way to manage your cash flow with dividend paying whole life in the way that Nelson described. Now, this is not a new process. This process is the ability to do this process has existed for more than 175 years in North America. A lot of people were doing this, but Nelson Nash, God rest his soul, was the first person to ever actually, that I know of at least, to ever actually write it down and take it out to the public and share it and teach people how to do this. You know, the infinite banking concept, that's simply the name that he gave it. And I think that sometimes scares people off when they hear the word concept, because they think it's some new thing or something unproven. And concept just means an idea or intention, in this case, on how to use something that already existed, but in a manner that better suits you. So the process, regardless whether it's student loan or some other type of loan, is we work with people's surplus budgets. And we're very good at finding surplus, even if they think they don't have any. And we use that surplus to put that money first rather than paying it down on debt. And which causes people to feel a sense of scarcity, because I have X number of dollars left in my life that you identified. Now you want me to take it all and put it somewhere else. And I feel like I lost it. In any other scenario or product, you actually do lose it. You're kind of giving away control of it or restricting access to it. But by putting money into these policies the way we design them, you have immediate access and liquidity to a good chunk of that money, which then can immediately come back out as a policy loan to start paying down your debt in big chunks in addition to your regular payments. And as we lower our debts, we lower our debt payments. And the lowered payments then increase our surplus budget, which they can then flow back against that policy loan. So as we set these policies up to be sustainable year by year for your funding of them, your capitalization of them, each year you have a policy loan available that's bigger than the year before, plus everything you paid back in the previous 12 months. So there's no increase in your expenses and there's no decrease in your lifestyle. We're simply better utilizing your surplus, plus we're taking any debts that have been paid off and redirecting those payments back to a direction that serves you. So this simply cycles around on an annual basis. And very quickly, in the example we gave in the seminar or our webinar the other night, these folks had, and I'm just pulling it up right now, and I'll just look at it at the numbers right. They had more than $100,000 of debt, which they're able to pay off in 5 years. That's great. Sounds like a lot of big payments, but the better part of that is because of the way we did it by utilizing the policy first, saving the money first, that they put $125,000 into savings while paying off $100,000 in debt at the same time with the same dollars, simply by redirecting it into savings first and earning the future compounded tax-free growth in those policies from day one and leveraging against them, not borrowing from them. That's the key to this process.
James, it's so phenomenal. And I mean, I've seen the numbers myself. I've seen the stories. I've heard the testimonials and I understand it. But like at first glance, for anyone listening, it almost sounds too good to be true. Do you or our panelists have anything to say about the power of the minimizer tools and some objections to the this is just way too good to be true comments?
Sure, I'll speak to that. Just to add to what's already been said by Dr. Murphy and James and others, what we're doing is we're providing a solution to a problem. So we've talked a lot about the problem, student debt, but there are many problems that families and individuals face. So we are providing a solution to a problem, but there can be many different problems that we can solve with the same solution. So we're focusing on student loan. We have previously focused on mortgages. So the use case of this process and of this tool can be anything that you want it to be. The other thing I wanted to add is not only are we providing a solution because we have the tool and we have the process, we're also providing a step-by-step plan, which in itself is huge. So people need to have a plan, and then you have to execute that plan. So we are here to help you execute, but you are the one that is doing all the work. You have control. You dictate how, when you are going to implement the plan. If life happens, or should I say when life happens, you can deviate from the plan as required. So I think all those things are extremely important. Step-by-step plan with coaching to help you adjust that plan when required.
That makes a ton of sense there, George. And specifically to me, it all made a ton of sense when I saw saw the math and saw how personalized this can really be. So it'd be great if you guys could potentially talk about how you guys have seen the student loan minimizer work with your existing clients and how you plan to utilize the student loan minimizer with new clients.
So I'll just jump in there and say, the thing you asked earlier, Jackson, about objections, and I think that's, to sort of build off what George was saying, is really important thing about this is a lot of plans that are out there for people, they don't necessarily remain in control of how it works. And so something that's really powerful about this is that the individual remains in control of this plan. So they're able to implement it. They have, us guiding them, but they're in control of implementing it. And as adjustments are needed, they're possible. So it's not like people are locked into something that they can't adjust or modify, because these things are not going to get solved in, a week or less. It's going to be something that people need to implement over time. And so really, in terms of how sort of to start off what you were just asked most recently, is we're working with people over a period of time to implement this. This is something that they're going to need to implement, at least on an annual basis in terms of how they're reallocating their funds, but continue to do the other things that they're doing. So this is an ongoing process and something that we're working with people actively now.
That's great. George, Wayne, do you have anything to add there?
I appreciate everything that is being said. The thing, and I might just go on a rant, so you might have to shut me off, Jackson, but clearly what society is practicing is not working at the level that we need it to work. And people are overwhelmed and feel that this is a daunting task to try to keep all the balls in the air, all the financial balls in the air. And in essence, what we're saying is maybe it's time to take responsibility for the way you think. Maybe it's time to take responsibility for your situation and not lean on the narratives that are out there telling you how to go about it, but just to really engage your thinking. After all, we're dealing with student loan debt, which is all about learning how to think. And so this is really a call to action to say to people, you know what, you need to take responsibility. I say this all the time, like I'm like a broken record, but you need to take responsibility for your situation, which I suspect everybody feels they are doing. You need to do some productive things. You need to do something different. You need to figure out a way that understanding that way money is flowing and have it flow in a way that benefits you and not everybody else. And then you need to do some difficult choices. You need to say, hey, I need to position myself for a better future. That's going to require something. And really, what we're offering is just an opportunity to rethink the way you think, put in place a plan that can genuinely take you to a place that you and your loved ones ultimately desire to go, and then just make those difficult choices to get ahead of the ball instead of constantly chasing. And so that'd be my 2 bits worth.
Thanks for adding that there, Wayne. And for anyone that is wondering how you can get started with this in your own life today, I've just pinned a tweet where you can schedule a call with one of our experts and walk through how to master your student loans, your mortgage, whatever it may be in your life. They're extremely personalized discovery calls where you're going to talk with our agents and figure out a solution that works for you. So I've just pinned that tweet there. You guys can refer back to that. And again, if you want to ask any questions, there's a tweet before that one that you can pin it on or send us a DM. James, I see you've unmuted. Was there something you wanted to say there, or should I move into the next question?
Yeah, no, I just wanted to add a couple of things. I'll build on what Wayne just said. I mean, personal responsibility is almost a swear word in today's society. But I firmly believe that the silent majority actually believe in personal responsibility. You'd never see it in the news. It's probably against the law to say it out loud now. But people really need to take control and work to take control. Now, I mentioned Nelson Nash here a couple of times in this call, and his famous book called Become Your Own Banker. I will often hold that up in front of a screen on client meetings and say the most 2 important words in that saying are your own. We teach you, we implement, we coach you. At the end of the day, you're becoming your own banker. We're not doing it for you, right? And that comes back to that sense of personal responsibility. Also, I made an analogy this morning in a different call that you can't learn how to skate by reading about it. You can't learn how to become your own banker by reading the book. You need to apply it. You need to learn as you go. So it takes action. Action that should not be scary. Action should be exciting for people to take. And if it's just not exciting, you need to rethink your thinking a little bit.
Is there a reason you think that people would object, or like, have you ran into people that object for any reason that you don't find necessarily legitimate? And what do you say to those objections?
Yeah. Number one, a big chunk of the population has completely abdicated their own personal responsibility around their own finances. And this is maybe a little bit harsh, but I'm not here to make friends particularly. Most people could tell you the score on every game that happened on the weekend, but they couldn't tell you what their finances look like or what their future looks like financially. They just simply, a little money comes off their paycheck. It goes into something the company set up for them. They don't know where it is or what it's doing, or they have no access to it. It's somebody else's responsibility. And I'm telling you, that's a plan for absolute failure. But if you went straight from being a child, being told what to do, to being in school and told what to do, to being in university and told what to do, and straight into an employer where they tell you when to show up and when to go home, when did you ever stop in any of that process to say, wait a minute, what part of this am I in control of? And I think you need to think about that. I mean, it really does come down to control. And you can either have it, or as I hate to quote my dad, but I will anyway. And he told this actually to the CEO of Infineo one time, sitting in front of my own fireplace. He said, look, it's easy. You're either in control or you're out of control. Full stop.
I love that. I really, really personally love that quote, James. And thank you for sharing that with us. Hearing you speak about this tool, about the more of the process of infinite banking and what people are really lacking in terms of personal responsibility these days, they really match up well. I mean, it seems like infinite banking could be the solution to this problem for a lot of people and how they gain control of their finances. Speaking more specifically to the student loan minimizer, and this can be for anyone, but I feel like, James, you might have some good insight at the beginning here. Was there a particular persona in mind when we built this tool? Is it for recent graduates only, people that are just coming out of school, undergrad or graduate school and looking for their first job? Or is this for someone that is more established in the workplace? I'd love to hear you speak as to who can actually use our student minimizer tool.
Yeah, no, age does not matter. How long you've been out of school does not matter. Obviously, you have to have some income, and ideally some income slightly more than what you're spending. Now, it's that part has got pretty interesting, because when we go through a detailed analysis of people's spending, they'll lay out, this is everything I spend, and then we'll hit the calculation and look at the totals and see how much they're supposed to have left over every month, to which their eyes bug out of their head, because they actually don't. Because there's a lot of leakage in your life if you're spending everything by accident. You know what? And, the old joke is you don't really think about the $6 coffee you get on the way to work every morning at Starbucks, right? But it's $180 a month slipping away. And little things like that are really nice luxuries in life, but don't actually have to be there. And it really, just going through that process alone really wakes people up. So as far as the amount of student debt or the age in which they tackle it, no, it doesn't make a difference. Like I said earlier, we have retirees with student debt that can still do this. Obviously, the sooner you get on it when you're out of school, the better you are. So you don't want to pay any more than you have to directly from your own income. So the sooner you can start, the better. But, you basically have to start where you're at today, because unless you have a time machine, I don't know how to get back.
I was going to ask, if we do have any students listening and they aren't necessarily paying off their loans yet, or their parents haven't started paying down their loans yet, I feel like that could be the perfect time to start a process like this. Am I wrong, or is that too early to start the student loan minimizer process?
No, it's perfect. And the thing is that it solves a number of things. But number one, right now, especially with high inflation, high prices, and everybody says these are the worst of times. No, they're going to get worse. This is just the current cycle we're in. But so how do you choose between paying off your debts and getting out of that quickly, or trying to save money for the future to buy your first home, or to buy your second home, or to buy your retirement home in this case. This solution solves that, because you pay off your debt quickly, and when you're done paying off your debt, you still have all your money. And it's in an account that's been compounding, and it will continue to compound the rest of your entire life. And it's liquid. I mean, people don't understand, if this account was also already at your regular bank as one of their fancy savings accounts with all these features, everybody would have all their money there already. The thing is, it's just at a different institution, but you still own and control it. But more importantly than that, it's the only account that I know of where you could access your money without any questions, without reducing the value of your account, and without causing a taxable event.
Liz, George, Wayne, do you have anything to add in terms of the benefits of just utilizing whole life insurance on that note, as James started to get into on the end there? If not, I can move into another question.
Could I jump in fast here, Jackson, for a second?
Of course, Dr. Murphy.
Yeah, just to follow up on two of the things that James said there. And again, for those tuning in here, if you have questions, we'd love to field your questions as well. If you just go ahead and post that in the pinned tweets that Jackson's put up. Okay, just two quick things. So one is, people ask, like it happened even in the webinar that we just did, where James went through a specific case study to show what the client was like in the beginning, and there's sort of like a before and after, like with like those weight loss programs or whatever. And somebody was asking in particular about, well, I don't see how the whole life insurance. So part of what goes on here is, and James has said this to me before, when you get into and wonder what they're doing, he says, well, having a plan is better than a lot of the clients that come to us. They have no plan. Okay. And so what I mean is, part of why I think if you haven't had an outsider come in and just kind of look over your finances, and just the act of you saying out loud, like, what your credit card debts are. If they, and it might be something that you're a little bit embarrassed about, and I have struggled with credit card debt in my days, so I'm not judging here. That's why I'm bringing this up, is I think some people, they kind of get themselves into a rut and they don't know how to get out, and they just don't think about it. And so just, having a call with somebody who's going to go through your finances, just you saying the stuff out loud and coming up with a plan. Yes, we think the whole life policy is an excellent, arrow in your quiver or tool in your toolbox, whatever a metaphor you want to use. But also, little things like people have credit card debt rolling over at 20+% APR, and they're also, having their employer put money into a retirement account that's earning whatever, 8% at best. Okay, like, so little things like that, if that's going to be your plan for the next 3 years, while you're still, like, in theory, dribbling and down, paying off, little piddling amounts of your credit card debt, that's crazy. That makes no sense. And yet that's kind of, how people get locked into a position like that. So I'm just saying that's one of the benefits of going through a procedure like this, is having somebody like James Pollard just go through, and he's dealt with lots of people in your situation before, and to give you a plan of action, and that it's going to motivate you to go ahead and do this. So that I would really encourage people, if you're in a bit of a rut, to just, book one of those free calls with our agents, because that'll help as well. Okay, I'll stop there. Thanks.
Thanks. I can jump in here, Jackson. So you mentioned earlier, often we hear this is too good to be true, or if this is so good, why doesn't everybody know about it? If this is so good, why isn't everyone doing it? So we get those questions all the time. And really, the simple answer is, we only know what we know. We don't know what we don't know. So if you haven't been taught, if no one's ever told you this before, then how would you know, right? So the government's not going to tell you about this. You're not learning it in school. Your bank is not going to tell you about it. If your parents don't know about it, they can't tell you. So it is our mission, our objective, to educate as many people as we possibly can on this process, and we've provided products to help with the process. And it is certainly not too good to be true, because this has been around, like James said, 175 years. So participating dividend-paying whole life insurance is nothing new. How we use it with this concept and this strategy is not new either. Nelson Nash invented it in the 1980s out of necessity. We talk about high interest rates and high inflation today. If we go back to the 70s and 80s, inflation rates were through the roof, and interest rates were in the 20s. So he discovered a better way to manage his money, to manage his cash flow. And he decided to use an insurance company instead of a bank. And there are a lot of good features that insurance companies will provide with these products that no one else, no other product, no other company can provide. So that's why we use this tool and this product, is because it's proven, it's got a long track record, and it works. And we can use our dollar more than one time, and then we manage the dollars that we have better so that they're flowing towards us instead of away from us. We're also solving the problem of interest. So those who understand it pay it, earn it. Those who don't understand it pay it. So which side of the coin do you want to be on? And if you pay cash for things, there's also a cost associated with that. So either we give our dollars to someone else and they benefit, or we lose the opportunity of our dollars to work for us. So with our solutions and our products and this process, we can solve both of those problems at the same time. And we're paying off debt and we're increasing our savings at the same time. This is an and asset that we can do many, many different things with. It doesn't have to be an or. It doesn't have to be I pay my debts or I save for the future. We want to do both at the same time, and that's what we can do.
I don't know if Wayne or George, you guys want to add anything there. Or not George, Wayne or Liz, you want to add anything there? And if not, I have another question for James. So, James, I'm really curious in hearing, we've learned a lot about the specific process or the specific student loan minimizer solution here. And we've referenced the mortgage minimizer solution. And you have also mentioned that whole life insurance can really be used very, very flexibly. Do you see any new products coming out in this minimizer product line in the near future? Any sort of large life expenses that you foresee us potentially helping people tackle, or things that you guys just help clients with day to day, maybe that we haven't came out with a tool yet for?
Well, now you're trying to peek under the hood, Jackson, trying to get ahead, ahead of the curve.
Oh, yes, I am. Don't want to give away too much here, but I know that this can be used for a lot.
Well, and that's just it. Yes, most likely there will be more solutions brought forth, but I will say this, regardless of whatever solution that we bring out to the public and market it to them, each one of these solutions in the background are almost identical because it's solving the same problem. What the different solutions do more than solve that solution is they catch the eye of people who are having that particular problem and bring them into the fold to learn about what we do. And I'll give you an example. At our last student loan webinar, we had a gentleman he's just outside of Cincinnati, actually. I met him with one of our U.S. agents yesterday or the day before. And he came in because of his student loan debt. That's what attracted him to us once we sat down and went through stuff, though. He's got a mortgage. He has a second mortgage. He has child support and alimony and credit card debt and vehicle loan, et cetera, et cetera, et cetera. So even though that he was attracted into Infineo to learn about this because of his student loan debt, once he's in, we can incorporate all of those other pieces into his plan and not just pay off his student loan debt, but his mortgage and his credit cards and his cars, and help him manage all the future growth on his other payments all in one system. So the new solutions we roll out are literally, they're marketing to a point that we're just tackling the pain points that people already have. And you might not have a mortgage, you might not have a student loan debt, but you might have some other financial situation that we can address a solution to. But once you come in here, we find out you have all these other things as well, and we can address them. Does that make sense?
And I'll just add to that as well. I think, as James said, this is customizable to each person's circumstances. So, even if there's something, question I get quite a lot from people coming in is to say, hey, I don't have, either a mortgage or I don't have a student loan. Does this still apply to me? And absolutely it does. We're teaching people how to use properly structured whole life insurance and how to, as Wayne mentioned, change their thinking about how they're managing the money in their lives. So whether it's a business owner wanting to be more efficient with how capital's flowing through their business, whether it's somebody wanting to set up some kind of efficient way to manage their retirement / passive income. There's, investors working to have their process be way more efficient in terms of money that's coming and going from their lives and have more control over it. So all of these solutions are possible. This is just one use case that we're speaking to today about student loans. But, regardless of whether or not we have more tools, right now we are working with people on these other solutions and implementing them.
That's great. Thank you for adding that, Liz. And if anyone else has anything to add on that, that's great. Or I'd love to have you guys speak now. And if not, I'm going to move into our next question, looking back a little more specifically at the student loan minimizer. But as you guys have now heard, the solutions tend to be pretty similar. They're all reliant on our AI-powered technology and math, all founded in math. And so I'm really just interested in hearing how this works in different economic climates. Maybe Dr. Murphy, actually, you could help add some color here. Does this hold up if interest rates start skyrocketing, if they stay the same? People seem to be very, very uncertain about what the future holds in terms of the economy right now. And so I feel like talking a little bit about the stability of whole life insurance would be great.
Yeah, sure. So I can say a few general remarks about that. So Jackson, you're exactly right. I'm very pessimistic about the near-term future of the certainly U.S. economy and Canadian as well. I focus more on my research on the U.S. market, so I'm more familiar with that. But yeah, I do not endorse and what the central bank has been doing, and the federal government in the United States has been running up debt. Like there's no tomorrow, as it were. And so I definitely think the economy is in for a rocky road ahead. The yield curve has been inverted for some time now, so that's traditionally been a warning sign of an impending recession. So for all those reasons, I think there's particularly urgency for people who are in a precarious situation financially to try to get ahead of that. And the sooner you get going, the better. Beyond that, too, just in terms of financial management, and that's what we're here to help you with at Infineo. Just as a side matter, I would say I think everybody, it's in your interest to try to get up another stream of income. Like right now, if you just work a regular job and you go to have a 9-to-5 or whatever, and you got your paycheck, I would really encourage you to try to diversify your income sources to get something else going, because you don't want to be scrambling to do that right when you and a bunch of other people all got laid off. That's not the right time to start that second business that you've been bouncing around for the last few years in your free time. So I would say that. So our solution, it works in any economic environment, right? Like it's always a good time to be your own banker, to use Nelson Nash's phrase, but you particularly want to be your own banker when, there's a crash or there's a financial crisis and all the commercial banks and other conventional lenders are, tightening up the ship and they're raising their standards and so forth. So that's, you want to have your system up and running to be to wean yourself from reliance on that conventional system. And I think now, as the cliche says, it's, the best time would have been 10 years ago to start, but the next best time is right now.
That makes perfect sense to me. And what would you say to the people that are, I apologize, I had a follow-up question there that I was going to ask and completely blanked on me there. So with that, I'm really interested to hear a little bit more about, sorry, I'm struggling to find a question we haven't touched yet. We should probably just wrap up a little bit early here in a second, instead of me struggling to find questions for you guys, unless you guys have any additional points we want to make here.
Yeah, let me just mention, just to add some color again. So what our program, because it's hard if people are just listening to the audio here in the webinar, you see screenshots. So our software tools, the mortgage minimizer, now the student loan minimizer, it's a very nice interface. So when you meet with one of our representatives, they quickly intake and get your information, like whether it's your student loan or your mortgage, your credit card debt and car loans and so forth, and your income. And then very quickly they can show you a very nice visual, graphical representation and a point-by-point plan, so you can see exactly how it works. But under the hood, all of it, it's the same basic process that you're building up this whole life insurance policy that you can borrow against, as Liz and James were mentioning in particular. That's why this works so well. Is you build up cash value in a whole life insurance policy, and then the company lends you money against that on very generous and flexible terms because they're guaranteeing the collateral. So that's what makes this whole thing work. And it's our different software solutions are just different particular applications of this more general strategy of using a whole life insurance policy, not only for the death benefit, but also, what could be called the living benefit. So that's basically what we're doing here. And really, I just encourage you, if you've never experienced that or seen someone show you the potential of that, again, no obligation, just meet with one of our representatives. They can just show you what this thing does, and you can just on your own look at it and see, do the numbers make sense?
That's perfect, Dr. Murphy. And with that, I actually remembered my question that I wanted to ask you, and the rest of the panelists. So what would you say to the people who are potentially preparing for this impending economic downturn that you're predicting, and they don't want to be giving their money away to another company, and they prefer to keep their money in some sort of tax advantage savings account or a 401k, a Roth, or I believe it's I don't want to butcher it, but there's RRSPs and different things in Canada like that. And so what do you say to the people who would rather put their capital into there to potentially avoid the impact of the economic downturn?
Well, I'm going to jump in here quick on this, but just very quickly to say, really what a properly structured participating dividend-paying whole life insurance policy is at its very core is an alternative place to store capital. So when you have additional or surplus capital, it needs to go someplace because you want to preserve it and protect it forever and ever and ever and never give up ownership of it. That's in essence what we're inviting you to think about. Why don't you preserve and protect your capital and have it available to serve you regardless of what your need is or your circumstance is or however hopeful or dire it is? You are in control. You've got a private reserve fund of capital to access unbridled, unrestricted, without qualification, without justification. That's in essence what we're actually inviting people to think about. How do you take control of this so that no matter what's going on economically or politically, you're in the driver's seat?
And I would say in addition to that, when you're looking for a place to put your capital, what kind of risk do you want to put your capital at? So anytime we invest, we are investing with the risk of loss. What we're talking about here is actually savings with guaranteed growth. And that is guaranteed by the insurance company, which is very, very liquid and capital rich, unlike the traditional central banking system. So if you're looking for places to put capital, there is no better place. And not only that, you have access to it. It's liquid. So when we lock our money away in jail in any kind of an investment, for that investment to grow, the money has to stay there. We can't touch it. And if we do touch it, then we lose the growth or the potential growth. So we're not locking our money away in jail. We have access to it because we're going to collateralize it. We're going to leverage that, and we're going to use other people's money. So that is another aspect that is very important. So when people are looking for places, think about the risk that you want your money to be at, and think about the liquidity of that money. And can it work for you? Is it working for you? And who is benefiting?
Yeah, just to follow up on that, you mentioned, Jackson, someone might think, well, geez, the conventional, gurus say I should put it if you're in the U.S., 401k or a Roth IRA, whatever the thing may be. And the problem is, George just underlined with those is that, especially if it's in one of those tax qualified plans, typically, unless there's certain hardship cases, once you put it in there, you can't take it out until you're 59 and a half. And so if for somebody who thinks that, oh yeah, the next 5 years might be really rocky in terms of the economy, you don't want to be putting your money into something that once it's there, you can't get it, at least without a serious tax penalty. You want to put it somewhere that, you know, you have access to. So again, it's the point here is not to say, oh, because the economy's bad, therefore this is a good idea. This kind of system makes sense in any environment. But I think right now in particular, given, you know, the things that I think are on the horizon, to remain nimble and have access to your wealth is all the more important. And that's exactly what this kind of approach gives you.
Beautiful. Thank you, guys. And that was exactly the answer and the color I was looking to add there for our listeners. And I mean, we really are coming up on time here. And I do want to give you guys each a chance to tell the listeners, both live and to the recording, where they can reach out to you guys. And so, if we could go around the room real quick and just let people know how they should reach out to you if they want to get in contact, that'd be great. We also do have our pinned tweet right there that anyone can use at any time. That'll book you in with one of our experts automatically. But if you're looking to speak with a particular expert on this panel, you can most likely DM them. I don't know, George, if you want to kick it off with a way for the listeners to reach you.
Sure. You can certainly go to our website, infineogroup.com, infineo.ia, AI. And also email is our first name separated by a dot at infineogroup.com. So george.roth@infineogroup.com.
And I think you actually just covered it for everyone else. So that works. And yeah, if you guys want to get in contact with any of our particular panelists, they're always open via DMs, via email, and they'd love to speak with you. We have our pinned tweet there. We'd love to get on a call and hear more specifically about your financial situation and how potentially one of our solutions can help you achieve your financial goals. And one of our experts would be there all the way along the way with you. So we really highly encourage you to take this free, no cost, no commitment opportunity. All you got to do is click the link in the pinned tweet. And with that, I really encourage you guys all to come to our next Twitter space, which is going to be with Bitwave. We alternate topics each week. This week was with our whole life insurance experts. And next week is going to be with our real world asset tokenization experts. And we're actually hosting Bitwave, which is a crypto custody solution. And they are set to bring a lot of really, really cool insights on the market and how you should be safely custodying your digital assets, whether it be crypto, security tokens, NFTs, you name it. They do it for individuals and enterprises. And so we're going to have a lot of fun there. We'd love to see you. That's going to be next Tuesday at the same time. And then we'll see you the following week for our next whole life insurance Twitter space. In the meantime, I encourage you guys to listen to our InFi podcast, which is up wherever you listen to podcasts, Spotify, YouTube, Apple Podcasts, you name it, it's there. Search InFi, the future of finance, and you'll be able to find the most recent episode. So thank you all for joining me, guests, my co-host, Dr. Robert Murphy, and all the listeners in the audience. Really, really appreciate you guys showing out and staying. So have a great rest of your guys' day.
Thanks all.
Thanks, everybody.
See you all later.
Thank you.
Thanks.